Thanks for clicking. Canada's inflation rate is continuing to slow, and if it continues, the Bank of Canada will not have to raise rates. This according to Governor Macklem at a speech on Tuesday. The speech and subsequent press conference comes amid three big reports that came out over the past few days. One from the Bank of Canada's Financial Market Participation Survey, showing most are predicting rate cuts by the end of the year. Another, predicting major decreases in Canada's real estate market over the next couple of months. And finally, a report showing strong job numbers in the U.S., putting even more pressure on the Federal Reserve and eventually Canada to raise interest rates even further. And Governor Macklem, at his speech in Quebec, was asked to address all three.
Figure it out yourself, okay?
So what I want to do today is briefly go over the governor's speech in Quebec, discuss what the governor had to say about the potential for rate cuts, the future of the real estate market, and the U.S. job numbers, and then go over why the Bank of Canada's policy is diverging from that of the Fed. Canada's national real estate data is set to be released next week, and we'll obviously have an update out on that data on this channel. Click like and subscribe if you want to get those updates, but for now, let's get into the speech. Very briefly, the governor devoted the first part of his speech to explaining how monetary policy works.
I think we should be writing this down.
The governor explained that inflation arises when there's too much demand and not enough supply, when there's too much money chasing too little goods. As the Bank of Canada raises interest rates, it increases the cost of borrowing, people borrow less, which translates to less demand in the economy, and price growth slows. Yeah, inflation 101. Too much money in the economy, pull the money out, and price growth will slow. But, as the governor noted, this takes time, and we won't see the full effects of the rising cost of borrowing for around 18 to 24 months. As such, the Bank of Canada is concerned with over-tightening, raising rates too much that will put too much stress on the economy, take out too much money, and is going to pause on the rate hikes for the time being. But even with the bank finally pausing on interest rates for the time being, questions are already emerging as to when the bank can lower rates.
Many expect a 1 to 2 rate cuts later in the year. Markets are pricing rate cuts later in the year. And I'm wondering, what would you need to see to start cutting rates?
Just look at the governor's face when he's asked about lowering rates again.
You junkie.
For his part, Governor Macklem reiterated what he said a few weeks ago, only slower this time.
I want to be very clear. We are pausing interest rate hikes to assess whether we've raised interest rates enough to get inflation all the way back to target.
Definitely getting a little annoyed about the constant questions about when we can lower interest rates.
The question is really whether we've done enough. It's not about whether we're considering cutting interest rates.
So you're telling me there's a chance?
Speaking of housing, the governor was also asked if there was a concern that with the bank pausing on interest rates, if that would restart housing activity, if that would restart the Canadian real estate bubble.
Do you have any concern about a recovery of housing activity following the move that you made earlier this year and signaling a pause on raising rates? And that pause, that signal might actually catalyze increased mortgage demand. Do you have any concern about that kind of resurgence of housing activity in Canada?
However, the governor doesn't seem to think that will be the case, and the bank is still predicting that housing activity, housing prices will continue to fall over the next 4 to 6 months, albeit at a slower pace.
In terms of our forecast, and you can see this in our monetary policy report we put out a couple of weeks ago, we do expect to see some further slowing in housing through to roughly the middle of this year. We don't think it's going to slow as rapidly as it slowed over the last 6 months, but we expect some further slowing.
With that said, the governor acknowledges that the bank really has no idea.
Look, there's certainly some uncertainty around that forecast. On the downside, as we've highlighted, the effects of interest rates could be more powerful than we expect on households. On the other hand, as you highlighted, if the fact that we've paused may bring people back into the market. These are things we're going to have to watch.
No.
And finally, the governor was asked about the strong jobs report coming out of the United States.
And today, Fed Chairman Powell said that the surprising strength in hiring underscores why the Fed believes it will face a longer battle to bring inflation down. Why is the Bank of Canada convinced inflation will decelerate relatively quickly, given that Canada has tight labor conditions as well.
The governor, for his part, didn't really answer the question about the reasons for the divergence, instead going over global supply chains, lower gas prices, and lower demand.
The global supply chain issues are working their way through. Global energy prices have come off their peaks. Demand for durables in Canada has moderated as housing is slowing.
But the governor didn't really address why the bank is pausing on interest rates while the Federal Reserve is continuing to hike. However, the reasons for the divergence between the Fed and the Bank of Canada policies was articulated by Benjamin Tal in an interview following the press conference. First, says Tal, Canada has 5-year mortgages, whereas the US has 30-year mortgages. So when the Bank of Canada raises rates, it has much more of an immediate impact than it does in the US when the Fed raises rates.
We have to remember, our mortgages are for 5 years. There's 30 years. It's therefore more sensitive.
Indeed, with Canada having about 1.1 million mortgages set to renew in 2023 alone, that's going to be a lot more people paying a lot more money for their mortgages in the next year. And as such, these rate hikes from the Bank of Canada is going to pull out a lot more money out of the Canadian economy than the rate hikes coming from the Fed. And the second and related reason why the bank is pausing on rate hikes while the Federal Reserve is continuing to hike is that Canadians are in a lot more debt than they are in the US.
Then, of course, in the US in 2008, they went through the mother of all deleveraging. We haven't. Actually, our debt-to-income ratio went up during this crisis from 140% to 160%, which means that we are more sensitive to higher interest rates because we have more debt.
So when the Bank of Canada raises rates, Canadians see a lot more of their money disappear, a lot more of their money get pulled out of the economy than do Americans, and therefore the Fed can go much higher than the Bank of Canada to attain similar results. With that said, the Bank of Canada can't let that spread between the US rates and Canadian rates get too far, as we're already seeing a hawkish Fed decrease the value of our loonie. If the gap between US rates and Canadian rates grows too much, the Canadian dollar will continue to fall, which will make imports even more expensive, which will exacerbate inflation, make the price of goods even higher. And it's for this reason, for the most part, that the US and Canada have maintained very similar interest rates for at least the past 60 years. If the US continues to raise rates, if the US goes 50, 75, 100 basis points higher than they are now, don't be surprised if this forces Governor Macklem's hand, if this forces the Bank of Canada to continue raising rates regardless of what's happening with inflation. With that said, whether or not the Bank of Canada will be able to continue with its pause on interest rates while the US continues to raise their rates remains to be seen. We'll obviously continue to have updates out on the bank's policies going forward. Click like and subscribe if you want to get those updates, but for now, thanks so much for watching.